So
All
thank you very much.
okay. Thank you so much, guys. Good afternoon, everybody, and please welcome on our today's RoboForex webinar with association with our company, which is called Strategic One. Uh, Basically, our today's topic is related to development of automated trading strategies without any programming skills. So, as you will see later throughout the webinar, there is absolutely no need to be a programmer, but still to be able to successfully trade automated trading strategies. Let me please also introduce ourselves. First of all, my colleague Zdeněk Zanka, who is a very experienced trader. His trading experience is really extensive since he started trading in 2005, I think, being a discretionary trader. But after some time, he realized that there is a plenty of advantages and benefits that automated trading can bring to him, and switched to algorithmic and automated way of trading. And I know for sure that this change, this let's say transition, was one of the best things he could do in his life. I'm sure he will provide you with more details in his part of today's webinar. And also, Zdeněk is an excellent mentor and educator in the Strategic One company. He teaches our customers how to successfully master the Strategic One software. And so far, I think he taught more than 1,000 students in his online trading courses and seminars. And as for myself, my name is Jan Rohrbacher. I'm also a trader and an investor. I started my trading career in 2002, so currently like 15 years so far in the trading arena. And beside my own trading activities, I also do design trading strategies for institutional clients, and also I'm a member of advisory board of hedge fund, which is called Charles Bridge Global Macro Fund, which is one of the largest, biggest fund in the CE area. In my portfolio, I use also automated trading strategies and concept, and I will discuss later in my part what concepts I use. All right then. So before we get started, I would like to first discuss the great benefits that automated trading can bring to. Like I wrote here, so let me guide you through this slide. So basically, the first thing is, in my opinion, the less stressful trading. Well, I have to say this is maybe one of the most important aspects. Before I started trading with Automods, I was not able to get my emotions under control. Still watching my trades, how the markets are doing. I was really hesitant about, let's say, entries, exits, and truly very nervous. But having this all automated, it just changed everything. So no worries, no stress, no psychological problems. So this is one of the most crucial parts, let's stress, for trading. Uh, what else? 100% concentration, like I mentioned here, because as you know, we are all humans, not machines, and it is inevitable that one day you will, for sure, make some trading mistake. For example, incorrect price settings, stop loss setup, and you can even mix up the buy or sell orders. Yeah, it happens. And even though it may sound quite funny to you, uh, this really happens from my experience. But if we leave this hard work, let's say on machines, then we shall be fine. No errors, no mistakes. The machine just you know does what it's supposed to do. And also, not to mention that you can also take a rest, take a nap when you are tired, or even go to a holiday or something. And the machine, the computer, is still able to make you some nice profits, to make you some money. Uh, Other aspects I mentioned here are also very important, right? So basically, machines can basically trade almost unlimited number of strategies, like 10, 20, 30. It just, depends on your computer or basically your server or VPS setup, which, I'm sure you will agree is absolutely impossible for human being, like to handle, let's say, maintaining like 20, 30 strategies in one moment. Also, as you all would agree, time matters. Like I always say, time is the most valuable commodity we have in our life. So why just, sitting in front of your computer, let's say 12 hours a day, when we have a solution that can do the hard work for us? And I will also discuss more in detail the time management of automated trading strategies, and you will see that you can easily save really, really a lot of time using algos. So, not time demanding, very important thing. And also, very important benefit is also definitely that there is absolutely no need to be a programmer at all to become a profitable and successful algo trader. We will present you the software, the strategic one, that is the leading solution in the world of automated trading, and it is a software that is able to generate, let's say, optimize or analyze automated strategies in just really a fraction of a second. Something that is absolutely impossible for a human being. So there is absolutely no need to be a programmer. Also, what else? Zdeněk and I always teach our clients to not rely just on one single strategy, which is like, putting, let's say, all eggs into one basket. But use a portfolio of strategies which would make your trading more balanced. Your equity curve will be much smoother and without any bumps and drawdowns, and I think you will be more relaxed. Again, this is something our solution can help you with, because it's designed to make and evaluate the whole portfolio of the trading strategies. And again, we will discuss this topic later throughout our presentation today. Okay, now, please, ladies and gentlemen, I would like to pass on to Zdeněk, who will guide you through his part, which is comparing two ways of strategy development. So please, Zdeněk, if I can ask you.
Good afternoon. It's nice to be here. I hope that you can hear me without any problem. Many thanks to Jan for a nice introduction of automated trading and of me and Jan. It's true that I used to be an automated trader for many years. But now I'm focused. I used to be a discretionary trader for many years, I'm sorry, but now I'm focused only on automated trading because it is much more convenient. In my part of the presentation, I would like to describe two ways how to develop automated trading strategies and show you the key benefits of the strategic one solution. So let's start. The outline of my presentation. At first, I will show you two different ways of developing automated trading strategies. Then I will describe my own way of development and my software solution. Then I will tell you a bit regarding genetic and random generation and why it's important to test quality of strategies. Because quality of strategies is extremely important. It's also called robustness of strategies. And this point determines which strategy can be profitable in the future and which not. So this is a very important part of my presentation. And finally, we will show you results of our strategies. So let's start. There are two ways how to develop automated trading strategies. The first way is, let's say, very old. It's the mechanical way where you are like a workman who have to develop everything and who have to do everything manually. And the second way is the automated way, where we are using the modern technologies to help us with the strategy development. So, the manual way. Manual way is, let's say, very simple. At first, you have to find the trading edge. It means that you have to find what you want to trade. the strategy logic. Then you have to code the strategy. So for the manual way, you have to be a programmer, and it is not so easy to code a strategy. Then you have to do the backtest. And if you ever try to backtest strategy in MetaTrader, you know that it's not so simple. Backtesting in MetaTrader is a bit more difficult. And the same with optimization. Each strategy is need to optimize. And if you want to optimize your strategy, it's not so simple in a platform like MetaTrader. Then you usually find a way how to improve the results. Let's say at some indicator, at some entry rules. Then you have to improve your strategy and vary the codes again. Then you have to do the quality tests, and it's also not so simple in MetaTrader. And when you do all these steps, when all these steps are finished, then you can start to trade your strategy. This way of development takes really long time. You need about 3 months of work to develop one single strategy. So this way needs really much time, and you have to be very skilled programmer. So this way is not so convenient for most of the traders. So let's look on automatic way. Automatic way is much better from my point of view, and I use this way of strategy development since 2013 for almost 4 years, and I'm very satisfied with this method. So I can recommend it. In this method, we use a software for automated development of trading strategies. It is based, let's say, on machine learning. It's not so difficult to use, but it brings big benefits. So we use the software for automated development of trading strategies. We can test up to 60,000 of strategies per hour. It's really a big amount of number. Just imagine to create 60,000 strategies per hour and test it. And also write the code of so many strategies. It's not possible to do manually. So in automatic way, we can test millions of strategies every day, every week. We can automatically find out how to develop, how to improve strategy results. And we have many tools which help us to select the best strategies, to measure the robustness of our strategy. Finally, we can save a trading strategy as a MetaTrader strategy in ex4 file. And what is most important, we don't need any programming skills, because programming is not so simple. And you don't have to be a programmer to develop automated trading strategies by this automatic way. So my way of strategy development is the automated way, because I am not a programmer. So this is the best way for me, because I'm not a programmer, but I want to trade automatic trading strategies. And how looks a development by this way? Steps in my process of strategy development are very simple. At first, I have to select the market for which I want to build the strategy. Second is to select the time frame. So let's say that I want to develop strategy for gold and for hourly time frame. Then I select the indicators. Which indicators I want to use in my strategy? And I just touch the button generate. And in the generate process, everything is made manually. Software will find the trading edge, test the strategy, recognize good and bad strategies, try to improve strategy and optimize the strategy. Everything is made automatically. Then I will do the quality tests, so measure the quality of the strategy and export to MT4. Export strategy to MetaTrader, I can start to trade. This way is much more simple and much quicker, because I use the advanced technology to develop automated trading strategies. So it takes only 2 weeks of work to develop one strategy. You can see that it's a much quicker and a much better way how to achieve good results. I use Strategy Quant solution. Strategy Quant is our product, our software solution, which uses machine learning. as I said, it's technology based on artificial intelligence. But it's not complicated to use it. Maybe it sounds a bit complicated, but it's not complicated to use it. Machine learning can replace humans in some areas, and it's 1,000 times faster than human. So this way is very good to develop automated strategies if you are not a programmer. As I said, it's not complicated to use it, and strategies can be automatically found and automatically improved. Strategy Quant also includes many tools to test quality of strategies, and it contains two ways of strategy creation, genetic and random way. So Strategy Quant solution is a software created from traders to traders, because all our employees are traders. All our employees are strategy developers, so they know what they need to have, what they must have in their software to develop high quality strategies, and everything is in the Strategy Quant solution. So now let's look to the quality of strategies. Why is it important to test quality of strategies? Testing of quality, it's like a funnel. Just imagine in the beginning you have 100 different strategies, but the strategies had a nice equity in the past, nice results in the history, but it doesn't mean that the strategy will be profitable also in the future. And this we can determine by the quality test, by the robustness testing. And in the quality tests, in the robustness testing, we do many tests where we determine the sensitivity of the strategy. And I will show you 3 examples of robustness tests: out of sample data, sensitivity to market cycles, and sensitivity to strategy parameters. So the first one, the most simple test, is out of sample data. It means that we separate our data into 2 parts. The first part, it's this part, the yellow one. It's called in sample data, and the second part, this blue one, is called out of sample data. And what does it mean? It's very simple. In sample data, we just develop the strategy. So in this white part, we find the trading edge, optimize strategy, improve strategy, and simply do the backtest on the historical data. And this part, out of sample, here we have, let's say, blind data. So we just check how the strategy behave in the future. So this is the first test. This is a very simple test, but very important, because we can see how the strategy behave out of the optimization period. Here we have, let's say, 3 years of out of sample data, and we can see that this strategy was still profitable. So this strategy passes this first test. We can go to the second one. Second robustness test is sensitivity on market cycles. Because each market has a market cycles. It means that the market sometimes go up, sometimes go down, and sometimes is in chop, goes to the side. Therefore, we have to measure how is the strategy sensitive on these types of the market, on this situation in the real market. Because strategy can't be too much sensitive for changes in the market structure. And how can we test it? How to test the sensitivity on market cycles? Technically, it's very simple. We just randomize trades or order. It means that we have some strategy. Let's say the strategy from the first picture. And the original strategy in this picture is the blue one. The blue chart in the middle. And we take the list of all trades and just randomize their orders. We mix it, and we can see how the strategy works when we have different orders of the trades. So this is a very important test, and the first, or let's say the second test of robustness. And we can see how is the strategy sensitive for market cycles. And the third test is one of the most important, and it's sensitivity to strategy parameters. Because each strategy has some parameters, and if the strategy is too sensitive, then usually fails in the real market. So how to test it? At first, I will tell you one example of the strategy parameters of this test. Let's imagine that we have a very simple strategy with only two moving averages. Moving average with a period 50 and second moving average with a period 200. And if the moving average with a period 50 crosses above moving average with period 200, then we go up, we buy. And if it crosses down, we go sell. Very simple. But if this strategy works great, it also have to work with periods, let's say 45 and 210. Yeah, I hope that you understand what I mean. So we made a small changes in the strategy parameters, and it still have to be profitable. And this is the result of the robustness test. Here we can see 200. In this chart, we can see 200 different tests, 200 equity curves, where we changed the values of the parameters. So this test is very important because we can see that the strategy is still profitable with the changes in the strategy parameters. So this strategy have a chance to be profitable in the future. And we have more tests how to determine the sensitivity of the strategy. And if the strategy has low sensitivity, then it's good for real trading, for trading in real market. So this is everything regarding testing of quality of strategies regarding robustness tests. And now I would like to give a speech to my colleague to Jan, and he will talk about psychology and time management in algorithmic trading.
Thank you very much, Daniel. Thank you very much. Well, for a very nice insight regarding robustness testing, and I'm really sure you guys like it. So basically, what I would like to guide you through is my part of the presentation, which will be focused on psychology and psychological aspects of automated trading. We will also discuss time management. We will also I'll also tell you about my story, what helped me a lot to become a successful trader. And finally, we will make a conclusion. And please stay with us until the very end, because together with RoboForex, we will also like to disclose our special offer to you. So stay with us until the very end. All right. So please let me now show you what are, at least in my opinion, the most common mistakes and myths, let's say, associated with automated trading. The first one is linked to risk. Basically, not having risk under control, even in automated trading. I can understand that many people can get an impression that once the strategy is automated, then also risk is under control, and they should not take care of any risk setup and so on. This is truly a very big mistake. So not having a risk under control. The second one, not having realistic expectations. I think Zeng and I often hear some of our students that the robots can generate fantastic returns like 100% each day or even an hour. This is really funny. And they would not even admit that even though big wins can be seen from time to time, that this is something exceptional which cannot be extrapolated into the future. So my advice, especially in the beginning of your journey towards successful automated trading, is be humble, be realistic, and be fair to yourself and have realistic expectations. So this is the second. Also, I'm no supporter of black box and black box robots and systems someone offers for really a lot of money on the internet. In my opinion, there are like no shortcuts. There is no such thing in terms of being a billionaire in a week using a black box strategy. Let's say purchased on the internet for 99 bucks, something as apparently something which doesn't make any sense at all. So no buying like boxes, like the strategies that you have absolutely no idea what they are based on. And again, I will also discuss the fourth point, why you should not rely on just one single trading strategy in your trading. Uh, like desperately seeking the holy grail trading instead of having more strategies, ideally those that are not correlated to each other, and simply diversify your risk to get your, let's say, equity curve more smoother and without any major drawdown. So just also very common mistake here is just relying on just one holy grail strategy instead of having nice decent portfolio of strategies that can be easily combined together and all together make a very nice equity curve. All right. So let me please discuss the first topic, which is not having risk under control. Uh, well, I always say risk is the only parameter that you can have under control in the world of financial market. Uh, like we all know, market is always right. Risk is something you must always limit and never allow any unlimited potential loss in your trading. Uh, like it's mentioned here, you need to know the risk of every strategy, what your maximum loss is, and how much can a strategy make for $1 of risk. I think it's pretty clear what I mean here. And also, please focus on return to drawdown ratio when evaluating any of your trading strategies. This basically tells you simply how many dollars you make for every dollar you put at risk. So it is very important to know this value, this ratio. The second thing I discussed in the outline is not having realistic expectations. So you need to have realistic expectation. I mean, like the perfect results in backtest does not generally mean great results on the real market. So in the real market world, it's something completely different. Uh, what I mean, backtest, is always run under optimal conditions. While on the other hand, on the real market, you can experience many different things you would not even consider when you are backtesting, such as changes in the spread, and especially during some macroeconomic news release. There are market gaps on forex, especially between Friday and Monday when there is some major event during the weekend, and especially like elections or Trump thing. um, Also, orders can also get delayed, not being executed instantly, but after some time. As you can see, there is a plenty of things you can encounter once trading on the real market, and therefore you need to set realistic expectations. And like I said earlier, be humble, be fair to yourself, try not to cheat on yourself, meaning that your backtests would, they would look great, but you'll be like dreaming of fantastic profits. But once you will need to face the reality on the real market, then you will become really, really desperate, and you definitely would want to give up and end your let's say journey towards successful trading. So definitely this is not the way. And again, uh, with these sort of problems we discussed, our software can truly help you a lot, because you can, for example, set up realistic spreads, slippages, everything that makes your backtest as much realistic as possible. this is a great help for you guys when backtesting and optimizing your trading strategies. Okay, the next topic I would like to discuss is why not rely, or why to avoid black boxes, to be more precise. And I will definitely show you why. You know, like I mentioned here, the key thing is, or the key aspect is view of risk. And how do these kind of strategies have risk under control? There is absolutely no such a guarantee that the risk is limited with these sort of black boxes. And moreover, majority of such black boxes use a balance curve instead of, let's say, real money equity curve on your account. I will show you in a moment what I mean. So the key aspect again is view of risk, and the profit and equity curve based on, in most cases, only closed positions, which is something you definitely needs to avoid having on your account. Unfortunately, when I set up this presentation, there was a slide. You know, there were like two pictures combining each other. So in the first, you will see only the red curve, and on the second, this picture. You know, so you can then easily compare what's the reality and what's the what was the dreaming about the curve, the red one, right? So now you see them both combined in just one picture, so there is no surprise effect for you guys. Uh, However, I'm pretty sure you know what I mean by saying that this is something you definitely need to avoid. On the red curve, you see just only the portfolio results based on closed positions only. It looks really great, don't you think? It's brilliant. However, on the yellow curve, you will see the reality, right? Which shows you or tells you uh, the actual size or actual value of your portfolio and of your account. So when we compare these two curves, it is something that's wow. I would never ever uh, advise someone to use such a strategy, because you can easily see that there are a lot of drawdowns along the way, and with the last trade that basically ruined all the performance over the, let's say, a year, more than a year. So basically it was like minus when we count it together, it was like minus 70% down from the equity high, let's say. So wow, no way. Or I would definitely uh, give you a small piece of advice in this matter. Please don't use black boxes, and especially those that are sold at, let's say, 99 bucks, offering or granting you some decent profits. All right. So what do we have next? Also, one of the very important aspects is not just focus on uh, winning a jackpot or hitting a home run and make a fortune. Just focus on long-term results, which is the key of successful trading over the long term. Uh, what what works in my perspective and what truly helped me a lot from the psychological perspective is a using statistics as your psychological support. And even if you are, experiencing a period when your trading strategy or trading system is not doing very well, then just still go back in history and see whether there was something similar to this in the past. So that really helps me, and I will show you why or how. What you can see here is at the first glance, you can see that this equity looks very, very, very nice. It's really nice shape everyone is dreaming of. But however, there is very, very interesting number, meaning stagnation in days. As you can see, the history is pretty deep, because we the results are based on the data out of 13 years, dating back to 2003, I think. So basically it's a long history that now you can see that there was like 244 days when the portfolio stagnated. So let's say less experienced traders who just deny the strategy, they would just get rid of it and claiming that this strategy doesn't work at all. However, if we take it from, let's say, the 13 years perspective, it doesn't look really bad. It's okay. But again, the key is to have a portfolio of strategies and basically be doing really fine. Because the number is quite high. Okay, 244 days. However, from the, let's say, 13 years perspective, it looks okay. So again, our solution gives you more confidence that even there was some minor drawdowns or the period where the strategy was not very successful, there is simply no need to panic. Just you have an evidence that this happened in the past, and you must take into account these situations happen, and just count with them. It's no big deal. And also, with portfolio strategies, you can easily overcome such an inconvenience, let's say, because even though one strategy might not be working very well at the moment, there are plenty of others that have great performance, and there are no bumpy roads. It's okay. All right, so this is the thing really put stress on portfolio strategies as a key to successful trading, and we will see it on this slide. So, like I said on the previous slide and discussed before, you probably may get, let's say, tempted to develop just one holy grail, never losing strategy with amazing returns, fantastic equity curve, no bumps, no drawdowns at all. But trust me, from my perspective, I'm pretty sure Zdeněk will agree, this is from our perspective a dead-end road. Uh, Instead just of this dead-end road, please focus on developing, let's say, a portfolio of nice strategies that, let's say, combine or complement each other and get really nice looking equity curve in real trading and truly a long-term stable profits. Like I discussed before, even if, let's say, some of the strategies in your portfolio are going sideways or even they are slightly losing, some are performing really well and definitely can have a winning streak, and overall you get a very nice results. So this is the key. I will show you more evidence regarding this matter. So basically, what we have here is just a one strategy based on euro against the Japanese yen, and we were able to achieve pretty decent profits with maximum drawdown limited. So like you can see here, it's like 20% PA return with 20% maximum drawdown. It's not bad. However, I will show you how we can improve it. So if we move on to the next slide, then we have a portfolio consisting of 6 strategies. And wow, it's really nice. So you get 60% PA profit and keeping the same maximum drawdown, right? And you can see the result is like not having just a one holy grail strategy and maybe spend the whole life of seeking the holy grail, but instead have just a normal decent strategies combining each other, or being a complement to each other, and have a nice portfolio when you just put them all together and achieve far better results. Also, many of our students use portfolio of even, let's say, 15, 20, or even 30 strategies combined together. And now you will see why, because again, having the same maximum drawdown ratio, maximum drawdown is 20%, and having a chance to have a nice return, 100% PA. Wow, it's pretty good. but still keeping the same amount or same size of the loss or maximum drawdown. I think this is the key for long-term success. Not just relying on one strategy, but instead having portfolio. So again, you have a conclusion. If I want to sum it up, then basically the key is to have a portfolio. Like I mentioned, our goal is not to find just one single perfect trading strategy, but instead we need to look for strategies that have great results and that are robust enough and that have a great chance to be profitable in the future. All right, and we can also look for strategies on from my experience, and again, I'm pretty sure Zdeněk will agree because we entirely switched to strategies that uses higher time frames instead of those who, let's say, using M1, M5, because it gives you more and more stability over the system or over the portfolio. Your portfolio will not be that vulnerable to, let's say, spread widening, the delays in the execution and so on and so forth, because it doesn't one trade just doesn't matter that much. If you hit a stop loss or there is some crash or something, okay, you have a loss, but still you're able to continue to you're not basically experiencing any major issues down the road. However, if you will just rely on very short or very small time frames, then I think it's not the best way to start your automated trading experience with. What I want to add here is that scalping strategies that usually have an excellent historical equity backtest may not work on the real markets. Please be sure that regarding scalping, I'm not saying that this is something that you need definitely to avoid, but scalping, in my opinion, is one of the most difficult trading techniques. And if you are a newbie or you are starting with trading, then definitely my advice to stick with, let's say, higher time frames. All right, so to make up a conclusion, yeah, like I said a lot of times, please do not look for shortcuts. You definitely need to do some homework. There has to be some effort put in your let's say improving of your trading strategies. Never buy strategies that hold losing positions, like we discussed before. I showed you the chart where you have two curves. Remember, there was just one showing only winning or closed trades, being all win trades. However, the real equity was, far beyond any expectation, or was far lower than the historical or closed trade equity only. Also, my advice is, you should definitely develop your own working automated strategies. And I'm, I have evidence, and I'm pretty sure that it's far easier than you think. Nowadays we can count with computing powers of computers. We can use solutions like ours, like strategic one, that will really facilitate you the hard work. So instead of manually or discretionary trade or backtest everything, you can just simply press the button and leave all the hard work up to your computer. Also, what was discussed many times today, have risk under control. Every single trade must have stop loss or somehow limited risk. And what is also last but certainly not least, know your trading parameters, its logic, behavior, setup, limits, everything. Right? So this is my advice and my conclusion regarding trading myths and what you should avoid in your trading. And now I have some time to discuss also, let's say, time management, like I promised in my outline. So basically, I will guide you through my, let's say, idea of having things under control in terms of, let's say, time management. And there is a pretty simple table you can see on this slide. Uh, it has three sections. The first is like daily monitoring, what I do on a daily basis. Then the second one is like monitoring on the weekly basis as well as monthly monitoring. So let me let me guide you through these in detail. Okay, so we have let's say if I may switch it back, we have let's say these these actions or this something needs to be done even though you're relying your strategies or your trading up to a computer. So what I do on a daily basis in is basically I check up whether everything is running without any issues, whether all the trades are being executed without any problems, if there is no, let's say, stop loss or some other setup is missing or not. So whether if it's something, if everything is fine, then basically there is no need to spend more than, let's say, 10 to 15 minutes every day with just like a regular check. Then on a weekly basis, I evaluate whether the strategies that are in my portfolio, because I use portfolio strategies apparently, whether these strategies, whether some of the strategies had not experienced any major drawdowns that was, let's say, below the historical drawdown that was, calculated in the backtest, right? And if this happens, I'm just considering whether such a strategy shall be or shall not be disconnected from my live trading account, right? So if I see that something is going wrong, I just do the disconnection of such a strategy that exceeded the historical drawdown. And on the monthly basis, what I do again, I'm just checking the strategies drawdown that was discussed before, and what I been adding up to this weekly monitoring is I compare the backtest of such a strategy that is run on my live account with realistic live results. If they are not very similar or something, there is some mismatch, I'm basically again and again investigating what's beyond it, right? So basically what I'm trying to say is if I see some discrepancies between like the backtested data and the live data, then I'm just considering again to disconnect the strategy from my live trading account. But this situation, it always depends. I can't be very general on this because it requires some experience. However, this is just from my perspective. And what I wanted to demonstrate with this is that basically regarding overall time requirements of, let's say, maintaining the automated strategies portfolio, you can see that it's not really time demanding. So basically on a daily basis, I spend 10 minutes a day. On a weekly, I add, let's say, an hour. And on a monthly basis, it gets more, let's say, into detailed comparing those backtests and live trading results. So it takes some more time. So it's generally like 3 hours. So if we count everything together, we get approximately 10 hours per month, which is, I think, still very, very nice amount of time that needs to be focused on automated trading. So compared to, let's say, 12-hour a day, sitting in front of the computer, sitting in front of the screen, manually backtesting. So I think you have an evidence that this such a automated way is far, far better. Uh, you get far more, let's say, relaxed, and I'm not exaggerating that this will definitely change your life. And like I promised in my outline at the beginning, I would like to, let's say, discuss how strategic ones changed my life and what impact it had on also not just my trading and also my other, let's say, activities and my life in general. So the really biggest advantage was that it saved me truly a lot of time, really a lot of time. Uh, Again, with strategies development, optimization, um, robustness testing. Also, not only in terms of, let's say, development, but also in terms of, let's say, execution, because these strategies are being executed on MT4 or NinjaTrader or whatever platform you're using, and SQ supports it. So not only in terms of development and optimization, but also in terms of execution. Myself, and also together with the we are not the programmers, right? So at least not very experienced programmers. So yeah, personally, I know like the basics, but not very advanced or detailed, say, techniques, how to code strategies. But still, with such a solution, a strategic one, I can still be an algo trader, which is something I wouldn't even imagine. Like if someone would tell me like 10 years ago, then I would consider him like someone who is exaggerating or just trying, to help me, or someone who is not telling the truth. So basically now I still, without any programming experience, I still can be an algo trader, which is something amazing. Um, and regarding also, like the effectiveness, efficiency, uh, we are using the most advanced technologies or techniques to create strategies, like the genetic evolution, and this stuff Denik was discussing in his part. So because it is based on artificial intelligence, this is something that like human beings can very hardly imagine. So basically, the software itself is thinking out of the box, and it basically is trying to find its own trading logic, and which is, really amazing for me, because these are techniques or things I wouldn't even consider with my way of, let's say, backtesting, right? So it's very nice. So again, very, very cool functionalities. And also in terms of, let's say, focus and being focused in my trading, we are all human traders or human. So it's almost impossible, let's say, to maintain a portfolio of 10, like 15,000, 15 or 20 different strategies in one time without any, let's say, errors, delays, hesitation. It's really, really, really would be difficult, and I'm pretty sure that after some time you will be really exhausted, and you will make mistakes. And in trading, some of the mistakes are really, really, having a really huge impact on your equity, on your equity bonds and everything. So basically, all these mistakes cost a lot of money, and that's the thing we definitely want to avoid. So this is something that truly helped me and basically changed my life in terms of not only trading but also social aspects, saved me a lot of time, and still keeping me the possibility to be an algo trader, someone who is definitely most advanced solution to the market. Right. So let me now please pass on to Zdeněk, who will show you very nice results of the portfolios that his students were able to achieve in the past years. So please, Zdeněk, if I may ask you to comment.
Yes, of course. Thank you, Jan, for a nice presentation regarding portfolios. From my experience, it's very important to be focused on portfolios of strategies. One strategy, and all results are portfolios of strategies of my students. Yeah, Just for example, this is a result of one of my best students, and he achieved really great results, I think, with more than 100 strategies. This is really a huge portfolio, frankly. It's not usual to have so big portfolio, but the result is very good. I will show you some other portfolios. This is a portfolio with a lower profit, but I think that's still very good. But I have to say that it is also with a very low risks. In this portfolio, the maximum risk is 15% of the account. So the risk is very small, but the profit is still about, let's say, 50% a year. I think it's a very nice result. And this portfolio consists of 15 strategies, so it is not so big. And the third portfolio is from 5 strategies, and all of them are on gold. So this is just gold portfolio, and I think that this portfolio is really wonderful. It's more than 1 year. It reaches 80% profit, but with only 8% big drawdown. So when you compare the risks and the gain, the profit, it's very nice. With very small drawdown, you get very big profit, 79%. From my point of view, this is very good, and this is the reason why I really love automated trading strategies. Because just try to imagine how to trade manually 15 strategies, or let's say 10 strategies, and trade 24 hours a day, 5 days a week. It's not possible. When you trade automated trading strategies, it's like to have your own trader which is focused 24 hours a day and which trade constantly without any emotions, without stress. It's a very good way to trade automatic trading systems. So this is all regarding these these 3 equities, and Jan, I think you can continue.
All right. So it's up to me to, let's say, to wrap it up and see a conclusion for you and provide you with special offer to you. So thank you very much for watching. Like I said in the beginning, and I kindly ask you to stay until the very end of this presentation. Now this is your reward. So in cooperation with RoboForex, we are proud to present, let's say, an exclusive offer to clients of this brokerage company. And all you need to be given this software for free on the monthly basis. You need to fulfill the really simple conditions. The first one is, let's say $1,000 deposit, and to be able to make at least 5 standard lots traded per month. So I think this is really basic and really straightforward, and given all the advantages and all the functionalities that this piece of software can bring you, I think it's really fair offer and very reasonable setup from guys from RoboForex. So I appreciate that, and so we are more than happy that we have a chance to cooperate with such a great company. And in case you want to know the details about this offer, you can go to their website, to roboforex.com, when you can easily through the menu forex trading, then you will have this option to click on strategic one or trading robots constructor, and then you will see all the details regarding this offer. So thank you again.
And Jan, I have also one very important point. You will also get a detailed ebook regarding strategy development. Yeah, we have a question here from Marcin. If we could show examples of using of our software. So if you take the software, the strategic one software from RoboForex, you will get an ebook with more than 50 pages, I think, and there is a detailed description of strategy development, how to build strategies, how to test robustness. Everything is described in details.
Yeah, thanks Nick for adding these information. It's really important because I can understand, Marcin, that you definitely need to see some more examples of using the software, but the time is limited, and since the software is really complex, we definitely don't have that much time to go through it. However, like Zdenek mentioned, there is an ebook, very nice ebook where you will get easily started with working strategic one. And also we are preparing some nice video tutorials, video courses in English as well as in other languages together with our partners. So definitely these will be available, let's say in a few weeks or months. So basically you will get as much information as you will need to get started with strategic ones and become a experienced user and algo trader. Yeah, there is.
Zdenek, yeah.
Yeah, sorry.
Thank you very much for the quite detailed introduction of quant trading, automatic trading.
All right.
Maybe you want to add something?
Thank you so much, Tucker, as well. We really appreciate this opportunity to having a webinar with you, and definitely we are looking forward to some further development of our successful cooperation and to see your happy clients and very successful traders together. So thank you again.
Thank you so much, Carol. And thanks to all attendees.
Yeah.
Yeah. Thank you very much, and I hope it will be not the last one, and we'll continue and just wait for the upcoming live webinars with the quite interesting topics. Thank you very much.
You can count with us, Carol. Thank you so much. Bye bye. Have a nice
Thank you so much. Bye.
day. Bye bye.
Bye.